Well, after that, ladies and gentlemen, I'm not sure that it's me who should be on stage or somebody else. Good morning. And first of all, thank you very much to ICNZ for inviting me back for my second ever visit to New Zealand. It's a great pleasure to be back here. It was a great pleasure to come on Air New Zealand as well, which I do believe is probably the world's best airline. Strangely enough, on the flight, I actually watched the movie An Inconvenient Sequel. And I agree with everything which Andrew has just said to you about it. Except I would add one thing. I was very disappointed in one respect, Andrew. It is a bit self-glorifying of Al Gore, unlike its predecessor. But it does make you realize what an important part individuals, which is all Gore is, he doesn't really have any formal status at all, individuals can play in making change. And that's one message I do want to leave with you today, because I am going to be talking about a lot of risks, not climate change, not cyber warfare, much as I'm interested in both those topics, but it does make you realize that we can all play a part and make a bit of a difference. Now, my presentation today is essentially going to come in three parts. The first part, I'm going to set the scene. I'm going to tell you briefly why the world is like it is today, racked with uncertainty, political turmoil everywhere. Then I'm going to point to some specific risks. I'm going to ask a couple of questions about those risks. I hope to answer those questions as well. But I'm going to be concentrating on short to medium-term risks today, because those are themselves very worrying, and we have to cope with those immediately. And then I'm going to draw some conclusions and hopefully leave enough time for some questions as well. So without further ado, let's get started. Oh, that incidentally is the Victoria Falls. For those of you who may be wondering, as you heard earlier, I now live in Zambia. You can ask me why later, everybody does. Why Zambia? Now, let's put this in context. I'm very indebted here to my very good friend now at National University of Singapore, and Danny Quah, who's done a lot of work on the shift in the global economic center of gravity. Up until about 1770, the start of the Industrial Revolution, economic historians tell us that 80% of global GDP was basically in Asia. And the Industrial Revolution changed that quite remarkably, and we got to the point by 1980 where that global economic center of gravity, that is the north-south line with half of global GDP to the east and half to the west, was somewhere off the west coast of Africa. Since then, we have seen the most rapid shift in relative economic power that the world has ever experienced. That line now runs somewhere through Iran. If the forecasts prove to be correct, it will go roughly through Bangladesh by 2050. And without wishing to sound like some sort of neo-Marxist, the reality is that political power tends to follow economics. So what we're seeing is a big shift in geopolitics as well. And that, of course, is driving instability and uncertainty, perhaps particularly reflected in the Western world, but also generally worldwide. And it's left the West with four major political threats. Resurgent China, revengeful jihadis. Now we get to the tricky bit. Anybody know what revanchist means? It's one of those geopolitical words. It actually means trying to regain lost territory. Revanchist Russia and revolting electorates, the net consequence of which is that populists are coming to the fore in elections. And I guess most of you in the room know who this gentleman is, but for the benefit of anybody who doesn't follow New Zealand politics, that is Winston Peters, who has just joined the coalition government for New Zealand First, a populist party, if ever there was one. Now, the reality is that the West really has no answer, no adequate answer to any of those four challenges which it faces, and that shows in contemporary politics. Now, that's what's generally going on in the world, and the reality is that in this sort of political scenario, economic scenario, history teaches us to expect exactly what we are getting today. Rising barriers to trade, slowing economic growth, and resurgent nationalism. And I can talk more about that in Q&A if you want me to. Having said that, having said all of that, actually, this year's not been so bad. Compared to what people like me were saying back in January could happen this year, year-to-date has gone pretty well, really. Higher economic growth than expected, central banks beginning to normalize interest rates without emerging markets collapsing into a heap of economic rubble, as some said they might. Hard commodity prices up. Oil, oil has gone up since I wrote this slide. It's now $64 a barrel. Brent crude has actually gone up 40% this year, but by historic standards, it is still remarkably low. These things are good for the global economy. The rest of that is fairly self-explanatory. I won't go through it in detail. The picture, of course, is a forecast of global economic growth for this year. So far, so good, and there's no real reason to suppose that things are suddenly going to go pear-shaped before the end of the year, but they could. Now, back in May, I started asking a question. I was looking at two indices in particular, equity markets, which have continued to do very well this year, and the VIX, level of volatility, at half its historic normal low, 10 points on the index. And the question I was asking is, are we overstating political risk, or are investors, business, and indeed policymakers getting complacent? And I have to say that the answer, as far as I can tell, is that certainly there is no sign of complacency. The mere fact that I'm here today to speak to you is indicative of the fact that there is huge interest in political risk. Financial markets are obsessed with it. I'm traveling around the world literally all the time talking to investors about political risk, which they are deeply, deeply focused on. So that took me to a second question. Are we looking at the right risks? And one of the things I want to demonstrate to you today is that whilst the risks we are looking at certainly demand attention, we need to be aware that they are distracting us from other arguably greater risks which could conceivably come to fruition even sooner if some of those risks were to mature. So, first question, are we actually looking at the right risks today? I did a presentation about 3 months ago, and one of the people in the room at the end of it said to me, with the exception of Europe, every risk you have pointed to sooner or later comes back to Donald Trump. What, he asked, are your top 5 non-Trump related risks? And I could actually only think of 4, which tells you something about the impact which this man is having on the way we think. Now, I want to paint a quick scenario for you. And before I do, I need to start by saying this. I do believe that the Republicans will succeed in passing a tax bill. I do believe they will succeed in passing a tax bill. Because if they don't, basically, they are chopped liver in the midterm elections in November. So they've got to get it done. But it is not an easy task. You would think this is straightforward. Everybody can agree to cut taxes, surely. But not the debt hawks, not the lobbyists who want to preserve their loopholes in the tax law, and somehow this has got to be paid for. The maximum that they can get away with increasing debt by is 1.25 trillion over 10 years. And at the moment, you're looking at something closer to maybe 2.4, 2.5. So they've got to find some more savings somewhere. So I do think that Donald Trump is going to go into his second year of office without a major legislative success, because I do not believe this is going to get done before the end of this year, sometime around the end of Q1. So roll the clock forward to mid-February. Trump still hasn't had a major legislative success. North Korea, to which I will return, is still testing missiles, possibly more nuclear tests as well. NAFTA negotiations, again, I'll come back to that, are basically deadlocked. And Trump has failed in his pre-election pledge to tear up NAFTA or renegotiate NAFTA. Obamacare still exists. Situation is difficult in the Middle East. And so on and so on. And of course, this man, Robert Mueller, is continuing his investigation of Trump and may well have issued further indictments by then, including to members of Trump's family entourage, Jared Kushner, Donald Trump Jr. Trump under a lot of pressure, needing to shore up his core vote. Now, you may not know this, but 38%, which is roughly the top end of the range which Trump is in, is probably enough to get Trump re-elected in 2020. So, ladies and gentlemen, get used to it, because we could be in for another 7 years of Donald Trump yet. Yeah, I know. I wouldn't be saying this if there were minors in the audience. It is a bit scary. What you may not also know is that Trump's approval ratings fluctuate quite a lot in that band. And in short, it's like this. Whenever he does something which he said he would do in his election campaign, no matter how horrendous it may seem to us, no matter how stupid it may seem to us, his approval ratings go up. Whenever he fails to do something he said he was going to do, for example, revoke Obamacare, his approval ratings go down. So he is going to continue to pander to his base. And he is also the master of distraction. So when he's under more pressure in the first quarter of next year, as he undoubtedly will be in my view, he's going to be looking for things to do to pander to his base, to shore up support, and to distract from the bad things around him. And that is not going to be good news. You remember this quote a few weeks ago? Calm before the storm. Nobody was quite sure what he meant. The press asked him, "What do you mean, Mr. President?" They threw bait at him, North Korea, blah, 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 blah. We may well be looking in the first quarter of next year at a rising storm created by Donald Trump for the very circumstances which I have laid out. Now, there are three, I think, most likely options there, and I'm going to talk about all of them, and they are essentially your three wag the dog scenarios. Now, you're all familiar with the 1997 black comedy movie about a US president, struggling approval ratings, election coming up, and he actually gets Hollywood to fake a war in the Balkans. Now, I don't think Trump is going to fake a war, but he may start a war, and the question is where and what sort of war. And those are the things I'm going to focus on for the next few minutes. The first is almost certainly the most important to you here in New Zealand. New Zealand is one of the great defenders and promoters of free trade on the planet today, as you know, although I do have to worry a bit about the possibility that dear Jacinda might decide that she's going to stop the TPP of 11 happening, and I hope she's going to come to her senses, because New Zealand, and particularly New Zealand farmers, have a huge amount to gain from a TPP of 11. So get your government sorted, please, because it's really well worth having what's coming up. The gentleman in the picture is Gary Cohen, as some of you may know, and I have to tell you, worryingly, that he is the only remaining strong pro-free trade voice in a White House which is otherwise dominated by economic nationalists, America first. Of all the things we know about Donald Trump, the one which we can be absolutely certain of is he is a deep down, dyed-in-the-wool protectionist. He deeply believes that tariffs will restore manufacturing jobs to America. Nonsense in my view, probably in the view of most of you too, but what he believes actually really matters. And I have to admit at the same time that I have taken a certain amount of comment, criticism if you prefer, from some of my clients recently. You said Trump was going to do all sorts of horrible things on trade. So far, nothing really bad has happened apart from America withdrawing from the TPP. But it is coming. He is obsessed with bilateral trade deficits. It's one of three metrics with which Mr. Trump is completely obsessed. The first and most important is his personal approval ratings. The second, God help us, is equity markets. He's taking personal credit for where the US stock market is today. He's going to regret that one of these days, because we all know stocks go up and down. But he seems to think that he, not the Fed, is responsible for the level of US stock markets. The third is bilateral trade deficits, and he is very, very committed to this agenda, and so is his base. NAFTA, as I've already said, I think it's going to grind to a halt. The Mexicans are not going to do a deal. They have a presidential election coming up on the 1st of July, and they can't make any more concessions. Trump is picking on South Korea this week. He needs South Korean help. He tore into Shinzo Abe about trade deficits in Japan. How to win friends and influence people by the President of the United States of America. But the most important of all of these is a Section 301 investigation into China. Section 301 of the 1974 US Trade Act sets America up as judge, jury, and executioner. And China is guilty. This is barriers to market entry for American companies. Give us your intellectual property, or you are not doing business in China. Lighthouser was the man who forced managed trade agreements on Japan in the 1980s in similar circumstances. China is not going to roll over and do managed trade agreements. In the event that Trump starts hitting China with tariffs, probably in first quarter of next year, China will retaliate. It will take the US to the WTO to start with. Now, that sounds all well and good, but did you know that the US currently is deliberately undermining the WTO dispute settlement mechanism? There are 7 judges on the appellate body. 2 vacancies. America is blocking those vacancies from being filled. There will be a 3rd vacancy by the end of this year. The minimum number of judges for the WTO dispute settlement mechanism to function is 4. So we will be at the minimum on the 1st of January. By September next year, unless America changes course, there will be another vacancy and we will no longer have a WTO dispute settlement mechanism. You think how much that matters, not just to New Zealand, but to the world as a whole. And the US is doing this quite deliberately because it doesn't like having rulings against it. But Beijing will also retaliate with measures. And I'll tell you what their first target will be. It will be farm produce. Pork, beef, chicken, soya beans. Politically highly sensitive. Trump will hate that. He'll probably lash out. And this is where steel, which so far he hasn't done, will come into play. And as soon as steel comes into play, Europe gets hit as well. And you can see that this would snowball and escalate. And I have to tell you that of the 3 wag the dog scenarios I am going to spell out to you today, I think this one is the most likely. Not a shooting war, but a trade war. I think Trump is very likely to go down this track, which is not to say better than 50% probability we finish up with a global trade war, but this is a fat tail risk, in my view. Trade war, not war. And here you see a quote from Brookings Institute and the arch-economic nationalist Stephen Bannon. Now, I'm going to have to ask you to excuse the small vulgarity here. When Bannon left the White House, I wrote an article in an American journal where I quoted Lyndon B. Johnson, who said when he was asked, why don't you fire J. Edgar Hoover, the ghastly head of the FBI at the time, better to have him inside the tent pissing out than outside the tent pissing in. And this is fundamentally the case with Mr. Bannon, who remains enormously influential over Donald Trump and who is out of John Kelly's chief of staff control these days. Now, of course, what we've really been focused on mostly has been North Korea. And I'm not denying that there are risks around the Korean Peninsula. Trump yesterday asked Kim Jong-un to come to the negotiating table. Now, why on earth would Kim Jong-un do that? History tells him that Gaddafi, who gave up his nuclear program in 2003, Saddam Hussein, who was booted out of office by military intervention in 2003, both ended up very dead because they did not have nuclear weapons. Events today tell him you can't trust America. They want to tear up the nuclear agreement with Iran, despite the fact that Iran is in compliance. So why would Kim Jong-un bother talking until he does have a credible nuclear deterrent? The answer is he almost certainly won't. And my bet is that we will continue on the current trajectory for another 12 to 18 months until Trump is at the point where he has to make a decision whether he is going to live with a nuclear North Korea or whether he's going to go for military intervention. My best guess is it's going to be the former, but I still put a 25% probability on Trump ordering some sort of military attack on North Korea with all the potentially disastrous consequences which that could bring. So yes, you do need to continue to watch this, but I think you don't need to worry massively about it until at least this time next year. And this is a quote from Nate Silver, my favorite psephologist, where he actually points out that Trump could start a military confrontation with North Korea in order to raise his approval ratings, and that chart you see there is actually his approval ratings. But actually, if we're going to see Trump start military conflict, I think more likely than the Korean Peninsula in the short to medium term is the Middle East. Iran has been declared enemy number 1 by the US following the more or less total degradation of the Islamic State Caliphate. And Trump does seem determined to undermine what is formerly known as JCPOA, Joint Comprehensive Plan of Action, in other words, the Iran nuclear deal. The picture is actually of Benjamin Netanyahu, a man who clearly firmly believes that Iran is determined to nuke Israel, and Jared Kushner, Trump's son-in-law, who is a close family friend of Netanyahu, a man, Kushner, who seems to think that he can solve the most intractable diplomatic problem on the planet today, i.e. Israel-Palestine, and also seems to believe that in order to do that, he can use Saudi Arabian leverage. Well, actually, at the moment, things seem to be working the other way around. Mohammed bin Salman, as you know, pulled off a bit more of a coup at the weekend, slow-moving coup in Saudi Arabia. He's now declared to, of all people, Boris Johnson, yesterday, that Iran has openly declared war on Saudi Arabia because the Yemeni Houthis fired a ballistic missile at Iran over the weekend. Mohammed bin Salman seems to be trying to provoke Donald Trump into taking even tougher action against Iran. He also seems to be determined to destabilize Lebanon by effectively firing the Lebanese Prime Minister, Saad Hariri, a man who's taking on every vested interest he can think of simultaneously. So in addition to the possibility that Trump could get engaged in some sort of military action against Iran, bombing an Iranian militia, maybe bombing an Iranian missile testing base, American-Iranian warships exchanging fire in the Gulf, you also have, I think, cause for concern over domestic stability in Saudi Arabia, which has already been reflected in the behavior of oil markets this week. If Brent crude was suddenly to move from 64 to, let's say for the sake of this discussion, 80, just think carefully about what impact that could have on the global economy, on central bank policies, and indeed on financial markets in the broad. We're very good at coping with gradual moves in the price of oil. We are very bad at coping with sudden, sharp upticks in the price of oil. This needs watching very, very closely indeed, the Middle East. Please don't allow North Korea to distract you from events in the Gulf region. Whoops, wrong button, sorry. And this, of course, is the Islamic Revolutionary Guard Corps badge. Keep in mind that putting the Israeli Defense Force to one side, these guys actually control the three most impressive militaries in the Middle East today. Hezbollah, the Shia militias in Iraq, and, believe it or not, relative to their performance 3 years ago, the Iraqi regular army. They are winning the war in the Middle East. They have already driven a Shia corridor all the way from Tehran to Beirut. They will continue to make gains on the ground. Neither the Saudis, nor the Israelis, nor Donald Trump are going to be very happy with that. Let's move on to brighter things. There's a lot I could say about China. I'm actually pretty relaxed about China. I think domestically, clearly, there are a lot of economic stresses there, but you have probably the most technocratically competent leadership anywhere on the planet today. I'm not just talking about these 7 guys on the Standing Committee. You look at the Politburo as a whole, it is packed full of skilled, experienced people who know how to run things and to get them to run properly. But we are going to be living with an increasingly assertive and mercantile, difficult, dangerous, ambitious China. So it's going to be an important, continue to be an important economic partner for countries in this region, New Zealand included. We're going to have to get used to the fact that they are going to be increasingly dominant, especially if the US continues to make a mess of what it now calls its new Indo-Pacific policy. We wait to be seen what exactly that means in practice. For the time being, however, despite the strong words, firm words that we heard at the party congress, I think we can reasonably assume that left to his own devices, Xi Jinping will concentrate on soft power projection, what I call his Davos agenda. China is doing very well out of this. Why would it change? But if Trump does decide he's going to confront China, be it in trade or in pressure over Chinese land grabs in the South China Sea, you've got to assume that the velvet glove will come off very quickly now and that we will see the less appealing side of China's international projections. Let's skip through some of this. I have to say a word about Europe. I know it's a long way away and it's very boring. The man in the photograph is Sebastian Kurz. Just won the election in Austria, proving that populism is far from dead in the European Union today. The big divide is actually not north-south anymore. It's east-west between populist nationalist governments in Eastern Europe and more liberal governments in Western Europe. There will continue to be tensions in Europe. As for Brexit, I have my biases on this. I reckon 50% probability that the UK will leave the European Union without a deal at the end of March 2019. I'm very happy to elaborate on that if you wish me to in questions, but I want to move on to the end. The nationalists are still there in Europe. The internationalists are fighting back, but there is a long way to go. And I think the 2021-2022 election cycle in Europe could be even more challenging than the one we've been going through for the past few months. So, now I get to what I want to say at the end, and it comes very much to the insurance industry. Back in August, I started worrying about financial market risk. Were we underestimating financial market risk? And I started off by looking at exchange-traded funds. Now, I'm not an unqualified admirer of the FT's Gillian Tett, but she is very, very good on this sort of stuff. Now, most ETFs are fairly unexceptional, but 30% of the ETFs in the market today, and there is a vast amount of liquidity been going into ETFs this year, are synthetics. And I've yet to find anybody who really understands how these synthetics work. And it's reminding me a bit of subprime back in 2006. And then I discovered that this guy, Jay Clayton, head of the SEC, on instructions from the Trump administration, has given up even policing slightly collateralized loan obligations, another type of instrument in which a lot of liquidity has been going this year. Subprime is back. It's gone up by a factor of 4 in the US in this year. And keep in mind that the Republicans want to revoke Dodd-Frank, which is the instrument which was built in order to protect us from another subprime crisis. And Mario Draghi, I think, was absolutely right at Jackson Hole when he said, we seem to be heading down the same track as we did in the run-up to the subprime crisis in 2007. And then you guys. Last week, the IMF published a report which warned that the pension industry and the insurance industry, in the quest for yield, in what the CEO of Chubb described as an unsustainable environment because of ultra-low interest rates, in the quest for yield, you have been investing in risky, volatility-based products. And if market volatility goes up very suddenly because of one of these political risks which I've been talking about becoming a reality, then I think we've got to start asking some questions about where we could finish up in terms of financial market risk. Back after the demise of Lehman Brothers, because of that shift in the global economic center of gravity, I was saying in presentations that when the next financial crisis comes, it won't start in New York, London, or Frankfurt. It will start in Dubai, Mumbai, or Shanghai. I now think I was completely wrong about that, because this man, Donald Trump, cutting through financial market regulation in the US, seems to be absolutely determined that when the next financial crisis comes, it will be, to quote a phrase, made in America. So, summing up, are we complacent? Are we fatalistic? Do we know this is coming? Yes, of course, we all know the next financial crisis will come. There will always be another financial crisis coming sometime in the not too distant future. I am not saying to you today that we are on the brink of GFC2. But what I am saying to you is this. First of all, there is a lot of political risk out there. Second of all, don't allow the issues you are focused on to distract you from other issues which could be even more worrisome. In other words, don't allow US tax bill to distract you from Trump's trade agenda. Don't allow North Korea to distract you from Iran. But thirdly, and most importantly, ladies and gentlemen, the time when we need to start questioning some of the assumptions we are making about some of the instruments in which we're invested and the robustness of our regulatory regime is, in my view, overdue. So please, if you come away with one thing today from what I've said to you, please begin to question assumptions which you have been making about how you are invested today. Ladies and gentlemen, thank you very much.
Alastair, thank you for a terrific presentation. I freely admit I am a geopolitics junkie, so I could have just kept listening to that presentation for the rest of the day. But let's pick up on a few of the points that you've raised. I was interested in your suggestion that Brexit, very high probability that Brexit will leave without a deal. Do you want to elaborate a bit more on that?
Yeah, very briefly. There's a lot of focus really on three issues at the moment, being the Brexit bill, which is important. How much is the UK going to pay? No question about that. Right of abode, which is highly sensitive and also has to be resolved, and the Irish border. The Irish border, I'm not too concerned about seeing progress on that before the end of the year because that will sort itself out when the really big issue is determined, and that is what sort of post-Brexit relationship does the British government want with the EU 27? And May the other week seemed to suggest that the Europeans should be deciding that. What nonsense. Until Britain can decide what its future relationship is going to be, you can't have a transition period. Why would the 27 get engaged in a transition period when they've got no idea what the goal of that transition period ultimately is going to be? So until the UK government can sort that out, and there is no sign of them doing so, and obviously May's position has been further damaged by the but I don't want you to think I'm minimizing this by saying distraction, because it is very serious. But the whole business of sexual malfeasance by members of parliament and by ministers in her government, that's a huge distraction, huge occupier of political energy, and May has little enough of that as it is. So I'm actually quite gloomy about the prospects of the Conservative Party, let's be clear who's to blame here, getting its act together and being in a position to negotiate sensibly. And from today, you have less than 12 months to reach a deal because of ratification requiring 5 months. So the clock is ticking. We are already, in my view, at the 11th hour for Britain to get its act together.
And those negotiations have hardly started out. Yep, that would give you confidence as well too. Let's pick up a couple of questions from the feed. Would a trade war play into Trump's hands in terms of his re-election?
The answer to that is probably not, which doesn't mean he's not going to do it. Clearly, it would appeal to his base, or at least to the Rust Belt part of his base. Let's go to NAFTA. One of the reasons Trump did not tear up NAFTA is because if he does, he will never get another vote in a farming state in the US. NAFTA has been an enormous boom to American farmers. So he's a bit torn there for electoral reasons. The second reason is he probably can't tear up NAFTA constitutionally. It probably is a congressional prerogative, not a presidential prerogative. So that's held him back on that. But he seems to be doing everything he can to sabotage NAFTA, persuade Canada and Mexico to do his dirty work for him, which they will not do. If Trump starts a serious trade war, if, for example, he were to impose, let's say for the sake of this discussion, because he can do this, 15% tariffs on all imports from China, the people who are going to suffer most are the people who shop in Walmart, and they are the people who vote for Trump. Trump's obsessions with equity markets is really interesting. Fewer than 50% of Americans actually have any interest in equity markets whatsoever, and of the people who support Trump, probably fewer than 15%. So what Trump is doing, in essence, is he's giving himself undue credit for widening the gap between the rich in America and the people who actually vote for him. This man, when it comes to economic literacy, is not exactly a PhD.
All right. And this is a question I think everybody's thinking a lot about at the moment. What are the chances that the Mueller investigation will net Trump himself, and could this lead to impeachment?
You know, I spent 21 years of my life working for politicians, and I have to say politicians are very good at surrounding themselves with credible deniability. Now, in the case of Donald Trump, it might actually be incredible deniability we're talking about, but it could still be sufficient to keep him safe. I know you're reading a lot in the press about Republicans who are kicking back against Trump, but you're not seeing that from House Republicans who are up for re-election next year, because Stephen Bannon is launching the biggest insurgency in the Republican primaries that we have ever seen. And if you go against Trump, Bannon is going to do his damnedest to get you deselected. So, what we're saying in essence, let's take an optimistic scenario. Democrats have a 12-point lead at the moment, nationally. Doesn't mean that they finish up with a majority in the House probably does mean that they finish up with a majority in the Senate after the next elections, the midterm elections, almost exactly 12 months today. They need 50% of the House to vote for an impeachment motion. So if they've got a majority, the first thing Pelosi is going to do is draft an impeachment bill. But they then need 75% of the Senate to vote for it. And that's going to be a big ask to get, I don't know, maybe 25, 26, 24, 25 Republicans to vote to impeach their own president. The mathematics are in Trump's favor.
All right, and just finally, and gosh, we could keep you here for another 2 hours based on the questions coming through on the feed.
I'll be around. Come and grab me a coffee.
Just a New Zealand-specific question. Can New Zealand steer a non-aligned course between USA and China? What are the implications, win-win or lose-lose?
Okay, now, New Zealand is far from alone in this problem, and Tim and I were actually corresponding about this some months ago. Everybody in this region is having to assess where they want to be on the spectrum between Washington and Beijing. And basically what you've seen in the last couple of years in particular is a drift towards Beijing. And like it or not, you probably are going to have to drift in that direction. But that doesn't mean that you have to be right in Beijing's pocket. You've got to find the right balance, and that balance is going to change over time. Trump may still be president on the 19th of January 2025, but he won't be president on the 20th of January 2025. We know that unless he changes the Constitution, and I can't see him doing that. So things are going to shift. Things will change in China too. China is not locked in exactly where it is today. It will continue to evolve, and obviously, as things change, New Zealand is going to need to assess its position quite closely. I think New Zealand stands to do very well out of the present turmoil, provided we don't have a trade war. I do think a trade war is a significant risk to a free trade bastion like New Zealand. So above all, concentrate on that too. Thank you very much for your time today, ladies and gentlemen. I will be around for the rest of the day. I'm very happy to chat to any of you one-on-one over a cup of coffee or whatever. It's been a great pleasure coming back to New Zealand. I'm staying tomorrow to go and look at some of your wonderful birds here before I fly home on Friday. It's a great opportunity for me too. Thanks very much.
Thanks very much. And
Thank you very much, Andrew. Thank you very much indeed.
Alastair, ladies and gentlemen.